30, maybe, I don't know. 145? Not sure? Just another moment, please. This is still F7. Yeah, this is still F7. Once upon a time, there was an opening balance of 100 and a closing balance of 300. If that was the only piece of information I was given, I think I would have spent 200. Yeah? So I've got to reconcile the opening balance to the closing balance. So the opening balance on our PPE is 100. Now there are several pieces of information. Depreciation. Does that cause your asset to go up or down? Down. Surplus. Does that cause your asset to go up or down? Up. You've made a disposal. Does that cause your asset to go up or down? Down. You've acquired a new item of PPE subject to a finance lease. Does that make your asset go up or down? Up. You've got more assets. You've got more assets. Now, none of these are cash flows. Depreciation is not a cash flow. Surplus is not a cash flow. That is the net book value of the disposal. It's not a cash flow. A new finance lease is not a cash flow. If you have spent no money, 100, 80, 140, 125, 155. If you have spent no money at the year end, your assets will be 155. But your assets are not 155, your assets are 300. So therefore, the inescapable conclusion must be the amount of money you've spent is 145. Well done. That is money which goes out, that is investing. When I was a student, everything was done in T accounts. Everything. Goodwill, group accounts, everything was done in T account. I love T account, and so do some of you. Opening balance is 100. Opening balance is an asset. Assets are debits. Debits are on the left or the right. So the opening balance is an asset. Depreciation, debit P&L, debit expense. Yeah, it's a cost, debit P&L. You're crediting PPE, writing the asset down. You're writing the asset down. Surplus is a gain, credit reserves, credit equity. Credit reserves debit the asset. Yeah, because you've got the surplus. If you've got the disposal, you need to take the 15 out. So you are crediting the PPE to get rid of the asset. Finance lease, crediting creditors to recognize the liability, debit the asset. So the finance lease is there. Now I have to say, I have to balance off a T account. Now when you're balancing off a T account, you need to have the closing balance. The closing balance is 300. The closing balance is an asset. So the closing balance has to be brought down on the debit side. So therefore it's carried down on the credit side, which is 300. The greatest total must be on both sides, so that is 335, so that is 335, and that is 190. 335 and 190, balancing figure is therefore cash of 145. I don't care. If you like T accounts, you will get the right answer. If you like plus minus, you will get the right answer. Don't do both. Don't do both. What you will notice that I have done in both cases is to say it's to do with PPE, yeah, and it's to leave an audit trail as to what each number means. So if I miss something out, because a calculation like this might be worth 2 marks, I can still get a mark and a half. I can still get 1 mark if I've made a silly mistake. So you must leave an audit trail. If you're doing plus minus, Don't do it across the line as a very, very small kind of squeezed up working. Yeah? Do it down the page, which encourages you to leave an audit trail. If you're not sure which method is easier, if you're not really into cash flows, I think plus minus is an easier question to answer. Does the asset go up? Does the asset go down? Does the liability go up? Does the liability go down? Yeah? Rather than have to think through debit and credit. Debit and credit works, but only if you love debit and credit. All right. Over the page, there is a tax. 2 minutes. Over the page, there is a tax. 2 minutes.